Hello, everybody, and welcome to this week's edition of the Mentor Club. This is Noah Davidson flying solo here. Let's go ahead and just get the ball rolling. I've got a lot of fun stuff I wanted to work with you on this week. Let's start out by quickly, of course, popping open the disclaimer. Of course, this is a game for grown-ups, and again, it's all about making the ability to make a smart decision because you are well educated. So let's go ahead and pop on in, and let's just go ahead and get the ball rolling. Let's start out just by talking a little bit about what's up with the market this week. Take a quick look at the economic calendar. Let's go over the sectors, and then kind of go from there. So we'll start out here with the E-mini S&P broad market, and very, very quickly, what we're looking for here, just so you can see this, is we're looking at a chart, daily chart. Let's make sure we got the ES there. All right. So we got our daily chart, and we're looking at this little upward movement price here. Markets come up off of kind of general support zone, known support, establishing kind of a high in there, but it's still challenging all the old resistance. So I mean, it still has not yet established new high. This high is simply higher than this one, and in general, we're kind of seeing that get drawn out over here with the sideways movement, and it certainly can break out. We're coming in off of a retracement, and some of the nerves got to the market. It hasn't broken the key support zone, but that key support zone down here, and we'll call it the 2040 ballpark, is really an important support zone for the market. And then this key resistance zone is also vitally important. Now, this week we've got some major economic catalysts coming up. So let's go ahead and talk about what they've got going on there. Let's go grab the economic calendar real quick here. Just talk about a little bit about what's going on with this. And so this week, kind of the big news that I see here is got a lot of European stuff going on. I mean, as far as like U.S. stuff, we've got Janet Yellen testifying here on Tuesday. But the big stuff I see is the Mario Draghi speaking. And this week we have the referendum in Europe, the vote on the Brexit, and they're going to be announcing that on Thursday. And so you'll actually be able to see um, when they make that announcement. Let's see if we got it here. We got European Union, long-term financing, EU membership vote coming in right there, and that's going to be very, very critical. So keep an eye on that, and that could be a catalyst. One of the things that the market is rallying this week, the things that they are attributing that to, is the reduction of fears around the Brexit and how that vote's going to go. And again, that's just voting whether or not the Great Britain, UK is going to be staying part of the European Union, and in their general monetary interest. It's an interesting situation. Definitely keep your eyes peeled on it and just watch how the market reacts. We don't have to make any predictions, just simply have to be able to react. So that becomes vitally important. So just kind of what I see in the market is general cautious bullishness, but watch that key support zone, watch that key resistance zone, and then watch out for catalysts on information. And don't be shy. If this market breaks down here, it's definitely time to change our opinion and start to. And I've started shifting the portfolio far more neutral, and unloading the stock positions. And this little drop last week kind of forced us into rolling a few trades and doing pretty well with it, but a little recovery, not surprising, as it came down into general ballpark and put in a little bit of a recovery. A lot of volume kicked in on that first drop, so you can see there's some definite nerves in there. And so watch the volume as it rises. I suspect it'll be a little bit lower. This is partial day, so that doesn't quite count, but that's kind of where we're at. So let's take a quick look across the other major market indices, and again, let's look at the NASDAQ, the Russell, the Dow, et cetera, et cetera. So let's go ahead and pop open the NASDAQ. Here's the NASDAQ, and we're seeing you could draw across the tops here, and you can draw across the bottoms here. And so we're coming into a consolidation, and you got a double bottom here, higher low, but you got lower high. So generally this can go either way, and it's just hovering around that 200 period moving average. And right now we got a slightly bullish candle. But same thing, key resistance, key support. Watch out for the news catalysts. As for the Dow, very, very similar story, equal to higher low. These same key support resistance zones are, breaks all-time high or potentially start of a downward reversal. So keep an eye on that. The Russell 2000, a little bit cleaner bullish retracement, nice new high retracement, a little bit of energy into it. Old resistance kind of support neighborhood trend zone, and a lot of overhead resistance as well as you kind of look out at the big picture. So I'd kind of look at this as a giant forming cup and handle. So cautiously bullish there. Quick look at crude light, energy continuing to truck. Now we got a very clean channel, and just watch the top of that channel. And key resistance point is key support zone, and we're currently making some momentum upward, and I expect that to continue. Let's look at the dollar index real quick. This is going to become important, and I actually see here kind of more bearishness. Again, downward pressure on the channel, lower lows, lower highs, lower lows, lower highs. Kind of an inverted head and shoulders or cup and handle, like not inverted, but kind of a downward continuation here. I'd say knocking on that door, that's a bearish signal, at least down to support. So you could look for the dollar to break down. Gold and silver, precious metals, hovering around resistance. It can break through, but don't be surprised if we get a little bit of a drop on that. Let's take a quick look at the SI. Same story, a little bit more strength in the silver as it's hanging out in there, but again, key resistance point. If it breaks higher, great. If not, watch for a retracement at the bottom of the channel. Let's take a quick look at the volatility index, a little bit on the higher end, coming back down off those highs. Never really got out past that key 26 level, hovering in today around 16, and not surprising since the market's rallying, since they are inversely correlated. The fear gauge, so option premiums are probably still a pretty good deal for buying and selling in that neighborhood. Getting a little bit extra premium. And let's take a quick look at the outside the U.S. Let's look at the EEM, and this is an ETF that tracks stocks for emerging markets, and kind of a good look of what's going on outside. And we're seeing that same consolidation. You're neither sure whether it's coming or going. Watch the top of that, watch the bottom of that, key support, key resistance. And then we'll look at the VEU, which is, again, Vanguard equities outside the US. And we got kind of a double top, a break of support, and the rally back up. Now that can kind of put you back in the middle of that zone. But anytime you break a support zone, that rally becomes suspect. And I'm going to talk to you guys a little bit about the Fibonacci ratios today and how we measure those up. So we'll keep that in mind. Neither coming or going. Now let's jump in and take a quick look at the sectors and kind of what we expect out of the sectors. Basic materials is putting in a nice little ascending type pattern. And this is kind of slowing momentum, but you're consistently seeing higher lows. So we watch that, and that could be kind of a ascending type triangle where it may take it a few attempts, but it's going to break that. Watch that key resistance zone. Cautiously bullish there. Energy sector, we're seeing a bit of a slowdown in there. The distance between the peaks slowing down, and yes, it is continuing to make some higher lows, but it's also kind of getting into the point where it's kind of you're seeing the whole angle of the channel change, and that's loss of momentum. And so higher lows, key resistance, key support, keep an eye on it. Energy sector, I expect to cool off here in a little bit. The financial sector, I probably pick towards the bear side, and here's why. It's violated the key support zone and put in an M for murder. I've got a breakdown, and this is a rally, and we'll talk about like how far those can rally up. We'll do some Fibonacci measurements. The kiss goodbye zone's right here, but it can technically come in anytime you get lower highs and put in a reversal. So we're seeing some suspect energy there in the financial sector, and look to pick your bears out of there. The industrial sector is a good thing to keep an eye on, because if it slows down, that's a good sign of what's going on in the general economy. And it's kind of stock in a box, neither coming nor going. The pressure seems to be to the upside, but again, watch the key support zones here, and if that breaks down, that's going to change our bias on that to the downside. Technology sector is, again, really non-committal. It's continuing to pressure up. You can kind of look at this as a cup and handle, but it has to keep going, so that turns it into a ascending triangle at best. And if it can clear that resistance, good, off to the races. But watch out for this key trend zone, and watch out for that 200 period moving average. And if we see it break down, that could be a very, very strong indication for us to change our bias bearish. Let's take a look at the consumer staples. And the consumer staples have been running pretty hot. They've been among the stronger group, and they're came in, boom, dropped a little, still approaching. Watch the consumer staples to break. And so again, good scenario there. We're seeing the discretionary spending a little bit weaker. We'll talk about that when we get to that chart here. Utilities have been hot, and they broke to the new high and they're kind of retesting. They do have some downside to the to the channel, but they're trading up at a known support resistance zone, so you can kind of watch that and see if it can power off again. But if it ends up coming in, watch it to fill the gap or to come to the bottom of the channel. And that probably won't coincide time-wise. It could, but it can kind of key ballpark, call it 49-ish. Let's take a quick look at the healthcare sector. Oh, and cool, I've got some random Fibonacci's drawn up here. We'll actually spend some time. I thought I'd give you guys a little lesson on Fibonacci's today. And let's go ahead and remove that. And what we're looking at here is upward channel. And same thing, kind of smack dab in the middle of the known support resistance zone. And power up would be good. Healthcare is actually one of the sectors I expect to do better. So based off of a seasonality expectation, we expect it to do well, but the signs of the chart are still a little sideways, kind of undecided. So look to leg in and then add to the position as it breaks resistance. So you can kind of look at it from that perspective. And then last but not least, let's take a quick look at the consumer cyclicals. And what we're looking at here is 200 period moving average, key support, some downward pressure, known resistance point, a lot of overhead resistance at 80, key support zone. So again, if it breaks resistance, we're running with the bulls, but if it takes out that support, we're switching our bearish bias. Watch for that catalyst with that Brexit information this week on Thursday specifically, and see how the market reacts. The reality of it is it might be priced in. The expectation of outcome might be priced in, but there is that potential for a surprise, and we could certainly see that make the market move. So anytime those central bankers are talking, Janet Yellen, Mario Draghi, European Union, central banks, et cetera, important stuff. So keep an eye on that. Keep an eye on your currencies. Keep an eye on the market. So now what I thought we'd do, let's take a real quick look and starting to unload some delta. So I'm paring this back a bit. The vast majority of our bullish position is now just in USO, and the remainder of the positions are really paring back. We pared back here big time on Home Depot, unloaded some of the stock on Calm, and then closed out Citigroup. We had a nice little bear spread on that, and so we're kind of unloading these and just looking to neutralize the trade and start working and focusing on that theta column again and building that back up. So we've got a nice strong theta in there, positive income on that. Maybe even start looking to add some of the bearish candidates in like the financial sector, some of the weaker sectors, and we'll kind of go from there. So that's kind of where we're at portfolio wise. We're still doing pretty good with our profits and losses from the open. And I thought we'd take some opportunity this week, since I'm flying solo, to teach you all a little bit about how to use Fibonacci and Elliot wave analysis in your own trading. And it's pretty awesome, unique, powerful pattern that we can use. And there's a lot of little lessons that go into understanding and learning about Fibonacci's. And so I thought I'd start out by just simply helping us understand the Fibonacci sequence and understand how this concept kind of ends up permeating the market. Really fascinating stuff. So hopefully you'll like this lesson. I believe you will. And learn a little bit about how not only the market works, but a little bit about how the natural world works. It's really fascinating concept. So we're going to start out by let's go do this. Let's go grab a browser real quick here, and let me go grab a Google. And we'll just look up. We'll look up Leonardo, not DiCaprio, not Da Vinci, but Fibonacci. And Leonardo Fibonacci was a Italian mathematician that lived in modern day Pisa, Italy. And this is the guy, he's one of the greatest mathematicians of Western civilization. And let's grab a real quick image of him here. He's one of the few people who has statues erected for him. So he's got, these are some pretty famous likenesses of him. But Leonardo Fibonacci, that means son of the Bonacci clan. And he wrote a book called Liber Abaci, which literally meant the Book of Calculations. And he introduced to the Western think tank some very important concepts. One, the Hindu-Arabic numeral system is something that he introduced to the European think tank. He introduced the concept of zero, helped them use the decimal point rather than fractions and get away from the Roman numeral system. And he also introduced what's named after him as a Fibonacci sequence and the concept of the golden ratio. So I'll kind of break those down for you here, and we'll kind of go from there. So that is the man, Leonardo Fibonacci. And in his book, Livre Bacci, he is accredited for discovering this little concept called the Fibonacci sequence. And we know he's not the first, but certainly one that wrote it down. And in the Fibonacci sequence, it starts out with zero, and it was based off of the estimated rabbit population growth. He literally did this using rabbits, is how he broke it out, and it came down to pairs of breedable pairs of rabbits. And so in the first month of his experiment, he had zero breedable pairs of rabbits because little baby boy bunny, little baby girl bunny hadn't reached maturity and weren't able to reproduce. But in the second month of his experiment, he has one adult breedable pair of rabbits. So we'll kind of draw this out over here where I'll just draw, two little bunnies, one little adult pair of rabbits that can reproduce. In the third month of the experiment, he still just has one breedable pair of rabbits. So that kind of drops down. And again, same story, one breedable pair of rabbits. By the fourth month, he's got two breedable pairs of rabbits. So what that does is it then branches out. And so now we would have two breedable pairs of rabbits. So now the question is, what do rabbits have to do with anything when it comes to trading and investing? Well, you'll be amazed at how much it does. This is a natural pattern that occurs. And so the Fibonacci sequence goes 0, 1, 1, 2. And then by the fifth month, you now have three breedable pairs of rabbits. Because same story, you get, three breedable pairs of rabbits. So out of those two breedable pairs by that fourth month, you now have, and again, I'm just going to start, to make life easier, we'll just go with R for rabbit, R for rabbit, R for rabbit breedable pairs. And so it breaks down into three breedable pairs. And then the next thing you know, you have five. And so it breaks down into that, rabbit, 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 rabbit pair. So it kind of breaks down. And so now you got 0, 1, 1, 2, 3, 5, and there's already a pattern starting to emerge. In the next month, you would have 8 breedable pairs of rabbits. So again, kind of extends. Come back here, boom. And it's starting to add up. So, and what you'll actually notice here is that each number in the sequence happens to be the sum of the previous two. So that in the next month of this experiment, there ends up being 13 breedable pairs of rabbits, and it keeps going on. It goes 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, and I'm running out of space, so we'll go ahead and put dot, dot, dot. And that dot, dot, dot implies a repetition of this pattern infinitely. And it's so okay. We're starting to break down some numbers with it, and it's again theoretical. It's assuming that you have no predators, that in a controlled environment that you can have a pretty predictable rate of reproduction for these rabbits. But what's interesting is these numbers in and of themselves have some very interesting properties. But what really unlocks the secret here is we could actually take the numbers from this Fibonacci sequence, and we could play around with them. And if we actually start doing some simple division problems where we divide each number in the sequence into the next number in the sequence, so I can take 0 into 1, and then 1 into 1, 1 into 2, 2 into 3, 3 into 5, and we can keep doing that calculation. And if we plot it on a graph, we actually unlock a really interesting concept. So like all good Cartesian graphs, it starts out at 0, and 0 into 1, it can't be done, so unless you're doing calculus. But 0 into 1, so we'll start the graph out down here at 0. But 1 goes into 1 once, and so we'll bring the graph up to 1. And 1 goes into 2 twice, so we'll bring the graph up to 2. 2 goes into 3 1.5 times, so we'll drop that graph back down to 1.5. And 3 goes into 5, and you're starting to see, and after about half a dozen calculations, what will happen is it hits the same number over and over and over and over again. And the number that you get, 2 goes into 3 1.5 times, 3 goes into 5 1.6 times, and you start to get this number. It starts to normalize. You'll get 1.61803 dot dot dot. And that number is it's what Leonardo Fibonacci termed as the divine ratio. He literally thought that he had unlocked and found the fingerprint of God. And so this became known as the divine ratio. Um, and I'm not sure I know how to spell divine, but we're close enough. So divine ratio. And modern day mathematicians call this the golden ratio. It's been known as the golden number. Modern day mathematicians now call it phi, the Greek letter of the alphabet, phi. And they've named that phonetically after Leonardo Fibonacci, son of Bonacci. So phi is this number 1.61803. And there are relationships to that number and another well-known number you might know called pi. But that's really where this number came from. Now, the fact that he used the rabbit population growth as a way to estimate it, is kind of inconsequential. It's just a way of unlocking it. But what you will discover is that this number ends up kind of permeating nature. So I'm going to take it one step further here. And we're going to take that magical number phi, 1.61803, and I'm going to take you guys over and we're going to do a little bit of geometry. And the proof that this was not something that just Leonardo Fibonacci discovered. We know that the Chinese knew about it. We know that all the other ancient civilizations knew it. The Aztecs and Mayans knew it. We know that the Egyptians absolutely knew it because you can see it in the proof in their buildings. The Greeks knew it. So it was kind of a rediscovery. But if you go back and you look at one of the very first math textbooks, it's Euclidean geometry. And in Euclid's textbook on geometry, this is where we get Pythagorean's theorem, which you might be familiar with, which is a squared plus b squared equals c squared. You guys might remember Pythagorean's theorem. Well, in geometry, we can define a line as the distance between 2 points. So I'll go point A, and out here we'll label point B, and just say, okay, well that is a line. We connect those 2 points. So we'll call that the line. And then that line can then be divided at a point. And I'm just eyeballing this. So we're gonna divide that at a point. We're gonna label that as point C. And this is called the golden section. And I actually think I'm off a little bit on my drawing, but close enough. So in the golden section, what the golden section gives us is a division in that line that creates a mathematical relationship between the start and end point of that and the kind of the segments and the ratios and percentages. And it creates quite a mouthful, but we're going to kind of break this down for you. So we can measure the distance between point A and point C. We'll call that, just a basic measurement. And then we can measure the distance between point C and point B. And then when we break it down and we look at it in a comparative fashion, we can measure that, point A and C is to C and B. So we'll call that, A and C. So A and C right here is to C and B what C and B is to the whole A and B. So it creates a relationship that in taking these measurements, let's see if I can kind of spell it out, A and C, right there, are to C and B, and I've got this white line that kind of measures that, kind of gives us that ballpark. It will be the exact same size, percentage, and proportion as we compare the C and B back to the whole A and B. So that's the way we could break that down. Another way of stating it was we can actually compare it to the Fibonacci sequence. So again, I'll just kind of jump in the middle of that Fibonacci sequence and we'll throw a couple numbers out here. So we had 13, we'll go with 21, 34, 55, 89, 144, again, repeats infinitely. And we can kind of just say, okay, well, I could break that down and say, take any segment of this segment, any section of this segment. I could say, well, A and C is 55, and C to B is 89, and A to B is 144. Now, I could have easily broken that down and said that A to B was 34 centimeters. Let's use a different color for that. Well, let's go with 34 centimeters. And I could say that C to B is 55 centimeters. And I could say that A to B would be 89 centimeters. Doesn't matter what the relationship is, because essentially what it comes down to is this. 55 is to 89 what 89 is to 144. Or it could be stated that 34 is to 55 what 55 is to 89. There's a mathematical relationship, and it actually is a multiple of 1.61803. So I could simply say that the distances between those lines, I could take A to C, and we'll kind of stretch that out here again and clean that up. So we'll go A to B, and we'll go point C in the middle here. And again, I could say that A to C, so we'll take that measurement, we'll say that it's 55 centimeters, and then we'll multiply it by 1.61803, and that would spit out the answer from C to B, and that again would equal 89 point something something. We'll go point 0 whatever, and it always has some random decimal point, and it's unlike pi that never repeats. Phi often repeats, and some of the numbers you'll see 0.618, and you'll see the numbers relate. We could break it down a little further into percentages, and so again, kind of the same concept that the Fibonacci sequence 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, ... Pythagorean's theorem, A to B divided at the golden section C, which creates those lovely proportions. And we could take those numbers and divide them into each other non-sequentially. So we know that when we divide them into each other sequentially, remember that graph, after just a half a dozen calculations, it goes from 0 to 1, 1 to 2, back down to 1.5, back down to 1.618, and then it repeats at 1.61803. Now, if I were to take these numbers randomly, like divide 21 into 89, or 34 into 144, or any number in the sequence to any other number in the sequence, you start getting very, very similar percentages. And I'll break some of the most common ones down for you. You'll get 0.236, which, if you converted to a percentage, would equal 23.6%. And then we could say, okay, another number you get commonly is 0.382. And that would equal 38.2%. Now, any number, you get this one time in here where 1 goes into 2 and you get 50%. So that's one time, and out of all these you get 50%, which is 0.50, which of course equals 50%. You take some of the other numbers and divide them into each other, you'll get this number, which you'll recognize, 0.618, which is 61.8%. So you move that decimal point, 61.8%. Okay, and any number divided by itself is 1.0. So number divided by itself, 1.0, would equal 100%. Now, that's relatively benign math from this point. So I could actually break it down and say, well, look, A to C is 38.2% of the distance between the A and B. And what would be left over is 61.8%. So actually, there's a really strong relationship between these if you actually were to add them together. So 0.236 and 0.382. Well, 6 and 2 is 8. 3 and 8, that's 11. So we go down 1, 11, carry the 1, boom. 2 and 3 is 5, plus the 1 is 6. So it adds up. So 2.236 and 382 add up to 618. Well, check this out. 0.382 and 0.618. Well, 2 and 8 is 0. And, carry the 1, boom. 8 and 1, that's 0, boom. And then look at that, 3 and 6 with that carried 1 adds up to 1, it adds up to 100%. So essentially, you take that 382 and that 618, and A to B is 100%. And it doesn't matter what distance you start out with, you get that little golden section in there where that's perfect. So you can essentially say that 38.2% is to 61.8% what 61.8% is to 100%. And okay, that's interesting. So that's really fantastic. Well, what does this have to do with trading and investing? Well, it actually is just, this is kind of what's referred to as um, sacred geometry, and that mathematical equation, that phi, that golden section, is one of the things that you'll see permeate nature. So I'm going to show you guys a third-party website. I have absolutely nothing to do with it, and other than the fact that it's just a cool website, and it's called goldennumber.net. And goldennumber.net has a whole bunch of fun facts and information about Fibonacci ratios. And you can come check this out with this, kind of dig around and find a little bit about more about the number and how it works. And you'll notice in here they've got some very interesting topics like design, beauty, life in general, some math concepts, geometry concepts, and you get into the markets. They got things like cosmos theology. Well, I mean, theology. What on earth are we talking about here in the cosmos? What do those have to do with general design, beauty, math, life, and then how do they all contribute to the markets? That's just, it's fascinating to think about. Well, let's break down some of the more common places you'll see this. Let's start out with life, something you're all familiar with. And here you get an application of the same geometry, but it's in a spiral. And so you get this Fibonacci spiral. And a Fibonacci spiral, in fact, to make that a little bit easier here, I'm going to just Google Fibonacci spiral for you. And a Fibonacci spiral, this is a really good example of how it works, where you can actually see where we're adding up and kind of, again, 1 and 1 is 2, 2 and, we can add those up. So it's kind of the way that this little spiral works is kind of starts in here and kind of hits this, ballpark here, and then it kind of starts to hit here, and then it gets bigger and bigger, and then, boom, boom, boom. That little spiral, just absolutely fascinating how it works out, but those are the numbers. So you can see those 1, 1, 2, 3, 5, 8, 13, 21. Of course, the next one up would be 34, and you can see where you add them together, and that area adds up. So that's kind of how a Fibonacci spiral is, mathematically broken down. And as you look at, how that little nautilus shell works, that little spiral is a very, very, tightly bound mathematical formula. It is really the distribution of energy. It's how energy moves. And so you'll see this spiral in all kinds of things. You'll see it in the spiral of a hurricane. You'll see that, that same spiral. You'll see that same spiral in the Milky Way. We can actually go with like Fibonacci spirals. I'll just add a couple words here. In nature, and we'll do an image search here, and you'll see just how common this spiral is. Of course, you'll recognize there's the hurricane, and then of course the Milky Way. Of course, you can see the Milky Way. You can see it here in the sunflower seed. If you actually look at the pattern of those, you can consistently see that little spiral here. You'll see it in the rose. You'll see it all over the place. It's everywhere you look in nature. You'll see it in your ear. You'll see it in a human fetus. You'll see it in seahorses. You'll see it just everywhere you look. It is just how things move here. In the pine cone, very, very common. That little spiral pattern is everywhere. So that's one of the things that kind of interesting in and of itself. So then we can jump out and look at. We'll jump out from here and just kind of show you some of the math that you'll see in the human body. So here's one of my favorites that's really, really easy for us to proof out, is to use the Fibonacci sequence to measure yourself. And so you can actually take out, hold your finger up to the screen, and literally I'm going to encourage you to do that. Hold your index finger up, and what you'll discover is, in fact, I might even try to make that a little bit more size appropriate for your finger, so that ballpark a typical human finger length. And what you'll see is that 1 unit, 2 units, 1 and 1 is 2. 2 units and 3 units, 1, 2, 3 units equals 5 units. 5 units and 3 units equals 8 units. And you can literally look at the segments of those bones and see a gradual Fibonacci growth, where you could literally label any one of those points A, B, and C. It could literally be any one of those points. So you could say that this segment is to this segment what this segment is to that segment, and so on and so forth, what that segment is to that segment. There's mathematical correlations, and of course I could take the measurement of this and I could multiply it by 1.61803 and actually tell you how big the next segment is. And I could repeat that process. In fact, this will be a fun exercise for you. And look, there's a Fibonacci spiral right there when you bend your hand. This is a real fun one right here. Great party favor. Is take a tape measure, preferably use centimeters, a little bit easier, unified, more uniform unit of measure, and measure from the tip of your finger to the line on your wrist, and multiply that measurement by 1.61803, and try not to be astounded and try not to let your jaw hit the floor when you realize that that's exactly how big your forearm is from the line on your wrist to your elbow, and it'll spit out the answer for you. You could also then take that measurement, and that measurement from your elbow to your wrist is the same size as your foot. And so by measuring how big your hand is, on average, you can determine how big somebody's foot is. And there's a lot of symmetry in geometry in nature, in the human form, in the body. And it's not just humans, it's literally everywhere you look. I mean, just real quick number for you, 5 fingers, that's a Fibonacci number. You got 5 openings in your head. You got 2 ear holes and 2 nose holes and a mouth hole. Got eye holes. You got them all in there. So you can actually add up. You're typically going to see those Fibonacci numbers really play out, and you'll see them all over the place when you go look in like nature in general. And you can kind of see, in life. Let's see what else they have in here. You can keep kind of poking around and see that you'll see it in nature. You'll see it in. Let's go look at the Nautilus shell one more time. Design, life, population growth. It's in your DNA, in case you didn't know that. You can actually boil down this into your double helix of the DNA. You can actually do the math. There's the 1, and the 1 equals the 2. And you can actually do a little geometric arc, and you've got your double helix of the DNA. So your DNA spiral is actually a testament to this golden section, and it's just absolutely fascinating. And this is just a fun one, random side note. That is an overhead picture of DNA, and that, just imagine for a moment, is what the human eye looks like. And you want to, they say that the eye is the window to the soul. Well, that's just an interesting way of looking at it. It's actually your iris DNA footprint. This is really kind of fun, interesting stuff in general, and you can sit around and play around with it. And when you get into some of the things about like the cosmos and the theology. I mean, theology is kind of fun, where you can get in and look at like the measurements of like Noah's Ark. In the Bible, for example, follow a Fibonacci sequence, and so do the measurements of the Ark of the Covenant and King Solomon's temple. They actually use the math in part of that. And the cosmos is absolutely fascinating to me. One of my favorite pictures in the cosmos is this one right here, and it's the perfect order of the sun the moon and the earth, and it creates, you get to use Pythagorean's theorem. You can literally measure from the center to the center, and you can actually use that. You can measure that ballpark out, and you can actually realize that the moon is a perfect Fibonacci ratio of the earth, and it is absolutely fascinating how that works. And so one of the next concepts that you'll learn is those numbers, 3, 5, 8. These numbers start to just permeate nature. Like there's 3 sections in a banana, 5 sections in an apple. You can crack them open. You can consistently find the number of seeds will correlate to 3, 5, 8. You can go look at certain breeds of flowers, and they'll have 21 petals or 55 petals. So on and so forth. So really kind of an interesting concept. Now, to really break it down and understand it, let's take it and show you the idea of the markets. And there's one more kind of picture that I have to show to help you understand the big picture. They have the stock market analysis Phi and Fibonacci sequence, and it creates what's called the Elliot wave. And the Elliot wave is what I refer to as the stock market cha-cha. And in the Elliot wave, it's just a general pattern of how the markets move. And it moves 1, 2, 3, 4, 5. So that's 5, 6, 7, 8, or what we call A, B, C. And so you'll actually see this little pattern repeat, where the market consistently runs 1 wave, 2 waves. And you'll see the other numbers here where you can actually say, well, this whole measurement here is 1, and there's a concept called fractal. And the fractals are just, this word didn't even exist. It comes from the root word fraction, fractured. Fractal is a word that was made up by an IBM programmer named Mandelbrot. And it's he coined that phrase in the 70s, and it really revolutionized some of their understanding of some of the mathematical principles. So we'll go look up a Mandelbrot pattern. And we'll look up a Mandelbrot pattern. You'll recognize these patterns. You've seen them before on like a psychedelic t-shirt. And one of the most common ones out there, what he did is he took the mathematical numbers and the patterns in the numbers, and he plugged them into the computer, and he had the computer spit out the images. So these are graphically produced images. They're based off of the Fibonacci numbers, the math, and the sequence. And this pattern, this is the most common one. It's called the Buddha head. And they call it a Buddha head because this little guy right in here, you can kind of look at that, and you can look at that little shape, and that little shape, that's what they're referring to. And it is, you'll notice that little shape, it permeates here from the big. You can see that whole thing right here. So that's the same picture you get when you're doing like the Earth and the Moon. That concept, you can kind of do that same measurement, and then you can understand that's an interesting constant. Well, you'll recognize some really interesting patterns in here. Like, can you see a seahorse tail in any one of these little patterns down here? Like, there, just imagine a little seahorse connected to that. And when you see these patterns in here, like, it looks random, but even though it's random, there's a very solid structure to it, and that looks exactly like a lightning strike. Or if you ever fly over a delta, over where the river delta meets, you can look at it. You can actually see these patterns are just, they're consistently going to look like this, and there's order in the chaos, if you will. And so these patterns are absolutely fascinating. When you break down, you kind of look at some of the things going on in our solar system and the distances of the planets of the sun and the sizes of the planets. This stuff it's everywhere you look, and it literally permeates nature. And so hopefully this is kind of opening your eyes to some just interesting concepts. The idea that the universe is a little bit bigger than all of us, and fun to think about, and certainly perplex ourselves about. And these patterns, essentially, they permeate nature. And one of the people who discovered this in relationship to the stock market was a guy named Ralph Nelson Elliot, who was known for the Elliott wave principle. And he's the person who kind of discovered this little pattern. The way that the Elliott wave principle works is, in a trend, anytime you start that new trend, when it first establishes a new high, we'll call that wave 1, and that's called the seed, as in like a plant, seed wave. The seed wave, and that seed wave leads to a retracement, first sell-off, and that first little sell-off we'll call number 2. And then you'll typically get a big run, and it's not always the biggest, but typically that third run is called the third wave. And it'll retrace into a fourth wave. And the fourth wave shouldn't come back below the first wave. It can come down and test it, but it shouldn't go below it. And that's where you get old resistance can become new support. And then it'll finish out in a fifth wave. And then after a fifth wave, you'll typically see a consolidation or a correction. And we will call that A, B, C. And that little ABC, here they call 6, 7, 8. So there's 8 moves in a total run. So it literally is like 3 runs up. So 1 run, 2 runs, 3 runs. You have 2 corrections back, 2 corrections. And then on the run down, you got 2 big runs down and 1 correction back up. And so it's literally running in like the Fibonacci sequence over and over again. It's like 3 pushes up. Plus those 2 dropbacks equals 5. 2 drops down plus the 1 run up equals 3. 3 and 5 is 8. And it kind of, the patterns get really interesting in that regard. The patterns can then subdivide and become fractals in themselves, and they work on all time frames. And so it's not uncommon to see like the third wave subdivide, or even the fourth, fifth wave subdivide, or you'll see little A, B, 5-wave patterns in any one of those. And it's kind of interesting, but I'll just pop out here and show you the chart of the S&P, and let's just drag, just to kind of explain this, and you can see it in the market. I'm going to drop out here to a 20-year weekly chart, and then we'll just pop in the S&P. And as you look at the S&P, I can highlight the pattern for you in a couple of spots that are super obvious. So here's one of the super obvious spots where you can see this in the market. Well, there's quite a few of them here. So let's actually see if we can get in there and highlight this one here. So here's 1, there's 2, there's 3, there's 4, there's 5. And then there afterwards you have drop 6, 7, 8, or ABC. And then it starts over again, and we see it pop up again, and we see it run 1, 2, 3, 4, 5, ABC. And it's just amazing to me how consistently you'll see that little pattern in here. You'll see 1, 2, 3, 4, 5, ABC, and you'll see it in up moves, you'll see it in down moves. Here's the crash of 2007 and 8. So here's an M for murder. And it's just kind of try not to let this one blow your mind. Even in that chaos of the drop, it dropped down 1, up 2. Then there's some subdivisions here, so you have to kind of look at the subdivisions, and I'll highlight those out for you. In fact, let me zoom in on it so we can see it a little bit better. And this is a weekly time frame, so this is the top, and so that first drop down here we're going to call 1, and you'll actually look, it goes down 1, 2, 3, 4, 5. It actually does 5 moves down, so that would be a little 5 and a big 1, and then it actually kind of pops, big red candle 2, 3. You see an A, and if you change time frames, it becomes a little bit easier to see B, C, and that creates a number 2. So that's number 2. And then we'll count this one. I'll do this one. A big whole drop to here. Boom. Has 3 waves in it. So I'll use this green one here. 1, 2, 3, 4, 5. And then it does its own little rally here, ABC. And that whole big macro scenario will come out here and say, well, that is a big number 3 down, number 4 up, and then it gets one last drop 5. So I'll clean that all up and just go 1, 2, 3, 4, 5. Now that could be a little subjective. And with years of practice and training, I know which ones to pick off and which ones to spot. It's also important to recognize that the pattern is full of variables. It's not random chaos. It's just full of random, a lot of variables. You can go back and look at the crash from 2000 to 2003. So you actually had this big downward 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And then the whole run up, this whole big run up. 1, let's clean that up. 1, 2, 3, 4, 5. And you'll notice that there's 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. There's little wave patterns inside of those, and so there's cycles within cycles. That's on a weekly time frame. We could drop this down into a 5-minute time frame and spot places where the pattern plays itself out in here. And not perfect, but here I can see the top and the bottom. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. It's permeating 1, 2, 3, 4, 5. So there it is, ABC. It tends to repeat. And so there's a lot of variables. There's patterns within patterns, trends within trends. And interestingly enough, when we were talking about the Mandelbrot set and the moon patterns and things, one of the guys who discovered, again, Ralph Nelson Elliot, when he discovered it, he calls it the wave theory. And there's actually really strong correlations when you go look at the ocean waves. So remember with like the Earth and when we go back, talk about the Earth and then the moon, that perfect little Fibonacci ratio circling around the Earth, and that's what creates the tidal pole. So when the tide comes in, you'll see the tide come in sets of 3. And I've actually talked to many surfers who say that they know that the big wave's going to be the third one, man. And they're like, oh yeah, it's all about the waves, bro. It's all about waves. The concept is pretty consistent that when the tide's coming in, you'll get 3 waves in, 2 rolls out, and then when it reverses and the tide's going out, you'll see just 2 waves coming in and 3 waves rolling out. And so there's a very strong correlation between that little tidal pole and those same kinds of concepts of the numbers. And so it's just interesting, call it what you will. And the fact that the stock market is a product of people, The peoples, it's deeply rooted in our DNA, and so essentially it becomes an expression of our psychology when you look at the patterns in the market. And you can go back and find patterns of old commodities, and you can see the charts in there. I once upon a time found a chart of cotton, had the same pattern from the 1700s. I also went back and you can look at that lily chart, from the what they call it, the tulip boom, tulip boom in Europe. You can go pattern that out and see it. But that's essentially your general breakdown of Elliott waves and Fibonacci's. And so these are fun right here. This little picture. This is using a little caliper tool that's measuring the same ABC wave pattern, and it's actually got a construct of time involved. So this would be the golden section of time, A, B, and point C, and that would be again, 61.8% and 38.2%, and that's just kind of the same concept. And you'll see this pattern repeat over and over again, and you'll see that Elliott wave patterns. Right here, here's a good example of one. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. It's repeating 1, 2, 3, 4, 5. Just kind of over and over again. 1, 2, 3, 4, 5. And for one of the keys, look for the obvious pivot points. And that's one of the big major pivots, are the beginning and ends of major cycles. So you can try and count. There it is, right there. That's it, right there. So here's a good example of 1, 2, 3, 4, 5. And that is how your Elliott wave pattern works. And so one of my favorite trading patterns of all time is a bullish retracement. And I can look at any chart and go find a textbook setup for bullish retracement and say, okay, well, I've got a good bullish retracement right now on United Healthcare. And let's back that out to a daily time frame. And we can sit back and say, okay, well, can I count and look at the wave patterns? So you might realize that whether you're at the top of a run or not, just by simply trying to count waves. And so here's kind of the obvious bottom. So that would be clearly a 1. This is 2, and I believe we're currently what I'd refer to as a subdivided 3. This could be a 3, 4, 5, but knowing that third wave subdivide, I think this is 1, 2, 3, 4. It's doing its own little fifth wave. So just based off of what I see here, and again, you can always look for kind of major pivots to be your clues. You can count those. Worst case scenario, we're at the top of a fifth wave, and so that means I expect probably one good last run out of that, and then that's it. And kind of look at that. We could go look at IBM's got a nice little breakout pattern. It's not a bullish retracement here, but anytime you get a pattern like this where you get a breakout, this would be the new starting point. So we can kind of say, okay, well, I know that here we've got a pretty good pattern scenario, and we're just set to break out. And so if that first breakout scenario ends up becoming part of a wave set, you can say, well, best case scenario, that's 1. This one's 2. We know that's 1 because it broke to a new high, and that's 2. So this could become a 3. And so we could look at that for a idea of a breakout. Now, the truth of the matter is that wave counting can be really hard. And when you get really, really good at it, you can become very, very proficient. You can start to anticipate the beginning and ends of cycles. And it works better on indexes and than on heavily traded stocks, and it doesn't necessarily work on all stocks. But it's a pretty good pattern that you'll see across the board. And looking at it for multiple time frames, studying, looking at handfuls of data and trying to identify patterns can be very, very good exercise for you. Here's just again a random chart of IBM, and it being IBM, we could kind of try and understand where we are within the context of whatever trend. And sometimes you do have to back it out and look at big, big, big pictures to understand where you're at to get a big picture. I might have to back that out and look at that, big time frame weekly chart to understand where we're at. And here we can actually see IBM over a topping pattern. I can see, big, big, big. These are good examples of wave patterns. 1, 2, 3, 4, 5. Anytime you can spot major bottom and major tops, you can go to work on trying to break down the count. 1, 2, 3, 4, 5. That's 1. That's 2. This whole thing of it here is a wave cycle. So I got 1, 2, 3. This one's a tough one to count. This is subdivided, but here we got 1, 2, and then this is subdivided at 3, 4, 5. So this whole thing counts as one. Boom. and then again repeats. And it's never perfect, but it's going to ballpark relatively well. And on average, I'd say this one's probably 1, 2, 3, 4, 5 done. Time correction. This kind of resets the clock. Anytime you get that 1, 2, 3, 4, 5 sideways, that can be a real big scenario where it can either reset and then take off to the upside or break down and break to the downside. So the monthly pattern of IBM kind of over here. Oh, got a bigger story coming out here. Now I've got down 2, 3, 4, 5. A, B. I'm actually thinking we're heading up based off of what I see here. This drop, and this comes into a big primary trend zone. And now I'm going to show you guys something that'll blow your minds. I'm going to actually use the Fibonacci drawing tool. And when I take the Fibonacci drawing tool, I'll use the Fibonacci retracement. And I can go and I'll start this out, and we can start out at any bottom and measure to any top, and I can show you where the Fibonacci percentage is in the ballpark of the retracement, like how far it retraces. So let me zoom in here and see if I can get a little bit better start for you guys on that pattern. And I'll measure from the bottom of this candlestick right here to the first run. And there you can see from that bottom to that top, it retraced 50%, halfway. And as I measure from here to here, I'll pop it up to the next one, and what you'll discover is that retracement is probably going to be either 23.6 or 38.2. I'm guessing it's 38.2%. So I'm going to again go grab the drawing tool here. Let me go get my regular pointer. So when I redraw that, all I'm going to redraw is the top point. So now, boom, we nailed that retracement right here at 23.6%. Now when I make and I measure up to the next top, it's also going to retrace to the same percentage. So watch as I redraw that and we measure it up to the top. Boom. How is it that same candle, that support, boom, hits 23.6%? Now that's just absolutely fascinating to me, but let me bring this one back down here and let me show you. We'll retime that one. Bring that in, boom, boom, boom. Okay, so just looking at this little segment in here, I'll re-establish the top and the bottom. So I'll come back down here and just measure the middle wave and not the whole thing. So here, let's really see if I can get this one to play nice. Let's go do pan it this way. Okay, so let's grab that pointer now. And here what we're going to be drawing, just so you're very clear, same bottom starting point. This top point, that's measuring from bottom to top. And literally what it's doing is it's measuring from 70 to 110. And so we could say, well, that's 40 points. And then it's taking 40 points and it's multiplying it by these numbers, 0.236, 0.382, and that's telling you how far it would drop. So that first drop, 23.6%. Now that's from this starting point. That wave in and of itself starts here. So I'm going to take the measurement and watch what happens when I take the same different measurement of the same wave count, and unbelievable, from this bottom to this top, now that same retracement that was 23.6 is 38.2%. Perfectly mathematically proportionate. And that's why when I connect the pivots, I can draw a trend line straight up that. And and I didn't do a great job of that, but that's because there's a geometric proportion in the rise and the drop, and the rise and the drop. And you'll actually see, oh my goodness, those two are the exact same. Well, they're not always the exact same. They can be very, very different in size. So I'm going to bring in a little more history. And I just picked IBM randomly out of a hat, by the way. And that I can take that measurement of that wave, and I could probably go sit that out and on top of, look at that. That's the exact same size as that wave set. And it's the exact same size as that one ballpark from top to bottom. So now, what I think is kind of fun and interesting is I'll take a big measurement all the way from the bottom. So we'll snap that one down to the bottom. And I find it's best to go from the wick, the high to the low, because that's how the computers are going to do the math between the highs and the lows. So we'll kind of measure that out. And we can say, okay, well, now I'm just going to go grab a rectangle drawing tool, and I can go measure any one of these, these wave cycles in here, and I'll measure a wave set back here. I'll measure from this bottom to that top, and we'll just kind of say that that's how big that cycle was. Well, now I can go grab that cycle from whatever random part of the chart, and when I go stick it up in here, you'll see, oh my goodness, there's that same percent ratio. And it can be a combination of that. So between 38.2 and 61.8%, that's that same ballpark, 23.6%. And that is a geometric proportion. Well, I can then take any other size of wave. We'll measure one of these smaller waves in here. See if I can just measure this one right here, the correction. So I'm measuring from this bottom to that top, and that's how big that one is. So watch. And again, I'm eyeballing this and ballparking it. Oh my goodness, would you believe that? We nailed it. There's a proportionate ratio there. And so what you were discovering now is that every little cycle of the wave sequence here is somehow mathematically related to the others. It's not chaos, there's variables. And these variables can be quantifiable and definable. And even these little guys here, that doesn't look like it's going to fit anywhere. It will when I shorten up my measurement. Like if I measure up and get a smaller part of that wave, and let's just measure the third wave, for example, and we'll leave the other waves out of it. And I'll just measure this one here. Boom. And in doing that measurement, we got some smaller ratios. So now when I go grab my little rectangle tool and I measure a smaller little zigzag in the chart, maybe just that little zigzag right there, or this one, ballparkish. And it's always going to kind of be like hand grenades and horseshoes, close counts. But as I, measure out that little cycle there, I could probably come down here and figure out ballpark where it is going to fit. And there is about as close as that one gets. And again, these are ballparks. That one's pretty easy to spot right there. Boom. That can be these two combined in there together. Boom. And that is just mind-boggling to me, that just taking these random measurements. And again, we can go change stocks. We can go pop in any stock, Caterpillar, and you'll see very, very similar scenarios. Now, there's two tools inside of most trading softwares. And this, Thinkorswim has retracements, extensions, time series, rate. I mean, they have more Fibonacci tools than you can shake a stick at. And I'm just going to show you one of my favorites, which is called extension. And we've been measuring retracements. So the way the math works for a retracement, just to make sure you're very clear, is we're measuring the distance between point A and point B. You have to pardon me, my lawn guy showed up if you can hear a weed whacker in the background. That's never a bad thing, somebody else mowing your lawn for you. So boom. So that's the point A to point B. And then the retracement, we'll call it point C. This is for algebra, not for the same stuff we were looking at. But we're measuring the distance between point A and point B. And the question mark is, where will point C come? So when we know the distance between those 2 points, we can estimate how far down it will retrace. And so the way a retracement works is it does the math, and then it's retracing its steps. It's measuring how far down it will drop. So if I were to measure any one of these waves, oops, I got the drawing tool here. Accidentally grabbed the wrong one. Let's grab that Fibonacci retracement, and I'll just measure that wave from bottom to top, and look at that. Just it nails that 38.2%. So that is measuring from that bottom, ballpark 30, to that top, ballpark 65. It's taking the distance between 30 and 65. It's actually doing the math, 65 minus 30, multiplying it by 0.236, 0.382, and then subtracting it from the high end so that it knows where to plot those lines. And boom, there's 38.2%, like clockwork. And that's how you determine a retracement. Now we're going to flip the math over. And what we're going to do is we're going to take the same wave measurement, and we're going to take that, but this time we're going to multiply it by those percentages. And we now know where support formed. We know the support formed here. So the question will then become, well, then how far will it go out in the future? So think about it like this. The point A to point B is the measure of the wavelength. We'll call that WL for wavelength. And it retraces down to point C, which we now have as a known, and we'll call that support. And we then can forecast out how big the next wavelength might be based off of the knowledge of the measurement of how big this one is. And it may be the same, it might be exact same, which would be 100%, but it might be a variable. So we could use any of the Fibonacci numbers, and we can actually forecast out tops. And one of the coolest things to be able to do is to measure a seed wave. Remember that seed wave is the starting wave, seed. And that's just like when you plant a seed, you know, how much it'll produce. Well, I can take the little drawing tool here, we'll delete that one. And I'm going to use the Fibonacci extension tool this time. So I'm going to go grab the little drawing tool here. We'll use the Fibonacci extension, and it will take the same measurement when I drag it and draw that on the wave, and I'll pull it down to the known support zone. And measuring that seed wave, would you believe that we were able to forecast out the known top? And it's never perfect, but you'll notice we nailed 161.8%. And it looks like we missed some ratios, but I can actually throw in some other ratios that will make that hit for us. We can, you know, that'd be 200%. We can kind of throw in some different ballparks. There's other numbers that work in there. But wow, 423.6% off of just measuring that first seed wave. Well, that's just luck. You know, you draw enough lines on a chart, you'll hit something. Well, let me show you how I can take and change that drawing. I can measure the third wave. And also we'll take that and measure the third wave. So we'll go and grab that point, and I'm just kind of exaggerating it so you can see which points I'm hitting. And I'm going to take this one, the one that measures, okay, and then we'll drag that to point C. And at 161.8%, it didn't measure the forecast at the top, but look at that, it hit resistance, like boom, boom, boom. And again here, 61.8% and drops. And you'll see it come up to 100% and, you know, slow down. It kind of ballparks, and so it doesn't have to be perfect. And I could probably plop in another measurement and come up with it. There's one other thing you can do. You can pull your measurement back down to your starting point, and get a forecast out that way. That's another technique that they'll do. So that's one way of measuring it out. Let's measure the next wave, and I can see how well that one forecasts out, and see what we come up with. Now that one looks like we're kind of free and clear, and you'll never know, but that might come in handy over here out in the future. So if we were measuring it right now and I was trying to do an estimate, I'm going to, let's do this, and I'll show you two techniques at the same time, and then we'll kind of go from there and call that a fun little Fibonacci lesson. So let's go erase all the drawings. And we will take a look at IBM, and I'll measure it in two contexts. We'll measure it in the idea that this is our seed wave, and then we'll forecast out and we'll ask how big that wave, the next wave, could be. But this also happens to be in the context of a downward run. So I can measure from this top to this bottom and come up with a retracement. And what I'm going to look for is what's called a Fibonacci confluence, or whether those lines come together. So we'll start out, let's draw the retracement first. So we'll go with the Fibonacci retracement. I'll measure from that top, boom, down to that bottom, and that's a complete full Elliot wave count. And you'll notice that as it rallied up, it hit 38.2%, and even the backside's dropping off. Check this out. When it rallied up, hit boom, 38.2%, and then it comes back down, 23.6%. It's like it's just ping-ponging between these lines, and it becomes a natural occurring phenomenon, becomes a self-fulfilling prophecy. So now we'll take and we'll draw the extension. And I haven't rehearsed this. I'm just kind of ballparking this with you guys in real time. And I'll measure that seed wave, and then we'll pull it back down. And what you'll discover is that sometimes, not all the time, those lines perfectly coincide. Boom. And a 61.8% forecast. Whoops, I accidentally squoze my line off so you can see that. Let's see if I can set that back to auto and see if that'll play nice. There it is. Okay. So there's that 61.8%, and I got a perfect confluence of those two lines. Now, if you do draw enough lines on a chart, you will hit something. But would you look at that support zone right there? Boom, is the one that's going to forecast out, and it's 61.8% of this whole drop coincides with this first cycle and a 61.8% forecast. So that becomes an area where I would become more likely to see a retracement back down. Doesn't mean it's the top, just means that maybe it comes back down, tests, and then heads on to the next one, and gives us some ideas. And so what we really use Fibonacci's for in trading and investing is for identifying catalysts for change in direction, support or resistance, we'll call it, to identify possible areas for support or resistance, and we use it for trade setup and targeting. So trade setup would be anytime I find a stock that I think could go down. And so here's a good example of, downward run back up, support could become resistance, 1, 2, 3, 4. I can estimate that a number 5 is coming. 1, 2, 3. It's come back up, and that should be the resistance area. So here I can see an M for murder. Whoops, got my little drawing tool a little out of control there. So I can see a little M for murder here, but it's in the context of this little downward trend, and the time of year is right for this stock to head down. So I could expect that we might get a fifth wave out of that, considering 1, 2, 3, 4, and I could use a forecasting technique to determine where support could come in. So I can use either, and this could be a real fun one for targeting. This is Citigroup, and so I can actually measure the macro wave. There's a big macro. Anytime you can go with a benchmark, there's a 5 wave set in there, and it's not perfect, but this is going to be a 61.8% retracement. I'm just guessing that based off of my experience with trading for all these years, and I can kind of eyeball these things. So I can measure that ballpark. And how on earth did I know? And I didn't pre-pick this stock. It just came out of a hat right now. 61.8% from that to that is the big support zone. So now if I measure and forecast out a seed wave, it'll come up with the same answer. Ballpark, I'm guessing. So we'll go again, drawing Fibonacci extension, measure from the top to the bottom, pull it back up, and it's not the exact same ballpark, but it accounts for that wick, 161.8%, and then these two line up in the exact same area. 100% and 261.8% are coming in the exact same zip code, so that'd be a big one. Now again, I would say known resistance. This is going to be a big ballpark for it, where this little neighborhood in here is going to be where I would target, and so that becomes my target is no more than 35. And that matches my other estimates, my other ways of estimating and targeting. And again, some people swear by this stuff, and some people will tell you it's a bunch of gobbledygook, and that predicting that you draw enough lines on a chart, you'll hit something. When you get to understand that there's a general rhythm and a sequence to the markets, predicting that this little M for murder drops down to this $35 support zone. I mean, it could go as low as 30, but I'll start out with a conservative target of 35, and we'll set up a trade to take advantage of that potential drop. And so we'll take Citigroup and look bearish on it for our trade setup this week. I might wait until I see the ECB, what happens a little bit later in the week to throw the trade on. But now let me just change that time frame from daily to weekly. Let's change it. We are on the weekly time frame. If I were to change it from weekly to monthly, it's going to look like just a textbook bullish retracement. So we'll go with a monthly time frame. Zoom in, and there is your bullish retracement, or bearish retracement, excuse me. Boom, 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 cloud cover. So there it is. 1, 2, 3, 4, fifth wave. Now I'll give you guys one last little hint. On average, the third wave tends to be the big one. The first wave and the fifth wave tend to be similar in size. So the general idea would be, from 1 down to 2 to 3, 3 is the big one, and you'd expect that 1 to 2, wave 1, wave 3 tends to subdivide. And if I said that was $5, then I would potentially expect the fifth wave out here, where that's 3 and that's 4. Fifth wave would possibly be $5. And I'm just ballparking numbers, just kind of give you an idea. That is a fun treatment of Elliot wave. And if you want to learn more about it, we could certainly incorporate this, and I can create some more lessons for you. Hopefully you enjoyed this week's edition of the Mentor Club, and keep an eye on the charts. Watch out for the Brexit, And watch out for anytime the central bankers are talking, because those are going to be our biggest catalyst this summer. And enjoy working with you every week, and I will see you guys all on the flip side.